Amnish, hi, morning. Thanks so much for joining us. First up, give us a sense on your take on these updates overall. Because now, in a surprising move, the commentary we are hearing seems like there has been a revival in demand, especially on the urban front. What are you making of these comments and updates from the companies? Because these stocks are doing very well in today's trade.
Yeah, so you see, there is a mixed kind of update which has come from many of these companies, and it is actually not very big surprise because, for example, you talked about say Dabur, where the base is now highly favorable, although this year juices or glucose, some of the segments have not done well, but the base is so favorable that after you can say very bad quarters, at least I think three or four. Now the base is favorable, and that is where there is some growth which is visible. But if you look at on a very broader side of things, we believe that the benefits of decline in inflation, then your tax cuts, and the fact that the base is not great, it will start reflecting in improved demand across the board. Now the increase in the volume growth for most of the companies, it will not be very sharp. It might happen at a very moderate pace, but definitely the things which are looking in 1Q, they are better than what they were in 4Q. And the outlook remains reasonably positive given the fact that the monsoons are likely to be normal, inflation is under control, and tax rates have been cut, and also the interest rates have been cut. So that gives you, I would say, reasonably, you can say, positive outlook for the growth, incremental to what we have seen in the past few quarters.
All right, so that's the overall take on the updates so far. I'm Amnish. Morning, this is Shrishti. But segment-wise, Amnish, which segment do you believe can outperform going ahead as well? Because a bit of surprise coming in from the companies that have already come out with the numbers. But going ahead, any particular segment that you want to flag off where maybe the pricing pressure, the inventory stocking, all these things are normalizing right now?
It's very difficult to pinpoint any particular segment per se because, say, for example, this quarter was not great for companies which are more into the summer-centric products. Now, whether these are you can say beverages or whether these are some of the you can say some of the other products like, for example, if it is Navratna or Talc, etc., which are you can say products of Imami. So very difficult to say that any particular trend will emerge. It will depend upon the seasonality, but one has to look at it that on a very broader side, the kind of pressure we were witnessing on the consumer wallet, the kind of pressure which we were witnessing on the volumes and demands, so that pressure seems to be slowly abating, and the volume growths are giving us an indication that there could be a gradual uptick in them going forward.
And Amnish, if you take a look at the kind of updates we've received from big box retail like DMart and Trent, and then when you compare them with the ones that we've received from pure play FMCG names, does this indicate that the buck may now be shifting from discretionary to consumer staples? Is that a trend that we could conclude, at least based on the limited numbers we have so far?
You see, that would be actually wrong to conclude. Say, for example, if Trent was going at 30%, 40% for a few quarters, and this quarter it has grown by 25%. Now, for most of these retail companies, there's a mix of two components over there. One is the increase in your area or the number of stores, and second is the SSG. So, for example, if you look at say DMart also on an per store basis, on an average, the sales are up by just under 2%. So that is not a very, I would say, healthy number. Now, if you look at say Trend, there also the increase in area was there, and definitely the growth rates in all these companies. Now, if you look at say on a year-on-year basis, so that doesn't indicate very sharp sort of an uptick. So I would say that now, for example, you look at the Jubilant Foodworks, which is I would say a solitary case in the entire QSR pack, where your like-to-like sales are up in double digit for second consecutive quarter, but that might not be the case for rest of the pack. Yes, there is a uptick in the discretionary demand, but the uptick is very muted, very gradual. And in some of the companies which are growing very fast last year, maybe due to base or maybe because the demand scenario is not that great as of now, you are witnessing some moderation in demand.
But Amnish, on to the stock price movement, the FMCG index is indeed the top gainer today. Like you have been flagging off, that it's sort of a mixed bag this time around, though the Q1 is better than what we have seen in Q4. But do you believe that the stock moves are justified today and this up move can continue for some more time? The reason I ask this because FMCG as a pact, as we know, has been a key underperformer, has been consolidating for a while now. So your take on the valuations, and is this a good time to maybe add on to some names?
You see, the main thing is that if you look at the growth rates are actually picking up at a very, I would say, tepid pace. Now, in terms of the stock price reactions, the growth rates are expected to be better, and that is already factored into the estimates of, say, FY26 to quite a good extent. Will there be any big upgrades to the estimates? That only we will learn over the course of maybe say this quarter or next quarter when the more visibility comes. Now coming to the valuation, you see, while many of the discretionary stocks they have been doing well, they have seen an up move in the past. Most of the FMCG stocks they were actually, if you don't look now, if you look at say past 6 months, many of them were down in the dumps. For example, Britannia was quoting at sub 5,000 rupees. Okay, even liver touched to 2150, 2200 rupees. So many of these stocks, I think they had gone to very low levels. Although the P multiple had not corrected to that extent. So my sense is that from those low levels now you have seen some sort of improvement in the growth rates. And the stock prices, because they have not gone anywhere, not for the last few months, but if you look at say last year and a half kind of a view. So that is some sort of an optimism which is getting reflected in many of these stocks. But having said that, one should be very, very stock specific because ultimately it will depend upon that particular company's numbers, how the valuations are, and how the things are panning out. So we have been, you can say, very positive on Britannia. Liver has been, I would say, more like a trading bet with an upside up to say 2600, 2650. And on the staple side, ITC is another stock where we have been very positive. So it is having its own set of problems as of now. But given the fact that it's a beaten down stock, I think this is the one which seems to be very convincing at the present moment and should give decent returns over the next 6 to 12 months.
Amnish, appreciate that view and thank you so much for joining us on the show and taking the time to speak with us this morning. On that note, we'll let you go.